When it comes to investing, terms like stock, shares, and equity are often used interchangeably, but they each have their own specific meanings. Understanding these differences is key for anyone looking to navigate the world of finance with confidence. In this video, we'll break down what each term really means, how they relate to each other, and why it matters for investors. Let's start by looking at the big picture of company ownership and how these concepts fit together, setting a strong foundation for the rest of our discussion. Stocks represent ownership in a company. When you buy a stock, you're essentially purchasing a piece of that company, making you a partial owner. Stocks are a broad term that refers to the collection of shares issued by a company. For example, if a company issues 1 million shares, all those shares together make up the company's stock. Stocks can be bought and sold on stock exchanges, and their value can rise or fall based on the company's performance and market condition. Now let's zoom in and talk about shares, which are the individual units of stock. Shares are the individual units of ownership that make up a company's stock. When you own shares, you own a specific portion of the company. For instance, if you have 100 shares out of a million, you own 0.01% of the company. Shares can come in different types, such as common or preferred, each with its own rights and benefits. The number of shares you hold determines your voting power and your share of any dividends. So while stock refers to the overall ownership, shares are the specific pieces you can buy or sell. Equity is a broader concept that refers to the value of ownership in a company. It's what you actually own after all debts and liabilities are subtracted from the company's assets. In other words, equity is the net worth of the company that belongs to its shareholders. When you own stocks or shares, you're holding a piece of the company's equity. Equity can also refer to ownership in other assets like real estate, but in the context of companies, it's all about the value that shareholders collectively own. Understanding equity helps investors see the bigger financial picture. Sum up: stocks are the overall ownership in a company, shares are the individual units of that ownership, and equity is the value of what you own. These terms are closely related but have distinct meanings that are important for investors to understand. By knowing the difference, you can make more informed decisions and better interpret financial news and reports. Whether you're just starting out or looking to deepen your knowledge, grasping these basics is a crucial step in your investment journey.